Hopes for stimulus was the central theme this week, as expectations for central bank intervention grew following weakening economic activity across the globe, and this caused a strong rally in the first half of the week. On Wednesday, ECB President Mario Draghi resisted mounting pressure to take further action to boost Europe's fragile economy and reiterated the burden is on the governments to agree upon and implement tighter fiscal unity in order to resolve the crisis. The market was pinning hopes on a rate cut or at least an extension to the discounted loan programme for banks, although neither appeared. For Draghi, to intentionally fall short of markets' expectations indicates he is either waiting for the outcome of the Greek elections on the 17th of June or waiting to see if Spain can recapitalise their banks without a bailout, or there is potentially some sort of game-changing remedy to be delivered at the next EU summit on the 28th and the 29th of June. The Bank of England and Federal Reserve followed Draghi's cautious wait-and-see stance on Thursday as Governor Mervyn King kept rates unchanged for the UK economy and announced no additional monetary easing, and Fed Chairman Ben Bernanke gave a nebulous testimony before the Joint Economic Committee. China booked this pattern emerging by cutting its interest rate by 25 basis points, satisfying some investors' wishes, which triggered a rally in equities midday Thursday, but it soon reversed gains when Bernanke's vague comments gave no insight as to what economic conditions could warrant further stimulus, and fueled the disappointment by declining to list any possible options should the US economy need more support. Besides stimulus hopes, risk asset advances earlier in the week were partly sourced from Australia's central bank cutting its rate by 25 basis points and unveiling GDP growth that doubled analyst estimates. Many economists disagree with the GDP figure as a true representation of the Australian economy and attribute most of the growth to its buoyant mining sector. Time is running out for Spain to strengthen the balance sheet of its banks, and the probability of a bailout scenario is increasing fast. Spread bettors and traders in general need to be prepared for an imminent plea for support by the fourth largest Eurozone economy and the ramifications on the markets. There is growing incongruence between policymakers at the Federal Reserve, the ECB and the Bank of England, meaning the next meetings could unveil a rate cut or further large-scale asset purchases as the pressure builds. It seems as though any action has been postponed for now until we know the future for Greece on the 17th of June. Highlights in equity news include Tullow Oil discovering extra oil off the Ivory Coast, which underscores the company's assumptions that there are significant oil reserves across the West Coast. Spain's quest to raise tax revenue has led to a good result for Betfair, as they are awarded online gaming licences in the country, allowing them to offer sportsbook and casino products, and Vodafone are in talks with Australian firm Telstra regarding an acquisition of their New Zealand-based operations. Economic data that will gather close attention next week includes UK manufacturing production Tuesday morning and US import prices in the afternoon. Wednesday is an eventful day with Eurozone industrial production, German and US bond auctions and US retail sales. Weekly US jobless claims are due Thursday, and in the early hours of Friday is a Bank of Japan policy press conference, and in the afternoon we have the University of Michigan consumer sentiment.